Okay, next thing we are studying is accounting for labor. In this chapter, we are not only studying about how we do double entry for labor. That is only significant part. In fact, I will not even explain it in introduction to the chapter. I will only do 1 or 2 questions in the kit about it. Because it is something relating to financial accounting, if you know financial accounting, you shouldn't have any problem here. And when you study process accounting, process costing, there you will know the flow of transaction through these different accounts. So the first thing we are studying is the labor payments, how labor is paid in an organization. There are 3 main ways. One could be output or piecework, or it could be time-based or bonus. Output or piecework is when you give payment to employees based on output. It is used in an organization where work is specified. So when work is specified, you want to give payment to employee based on work. Work could be anything. It could be unit produced, like for someone who is working in the production, or it could be unit sold for someone who is working in the sales department. So the idea is that we want to motivate staff to work harder. So by itself, piecework system is like incentive system, something that motivates, because you are giving payment on output, so they will try to increase output as much as possible. But the downside is obviously when you give payment to the employees based on output, they will not focus on quality. They will try to achieve as much output as possible, sacrificing the quality. So obviously when we have a output payment system, we need to have kind of control for quality, where we will give payment to employee where a certain quality has been achieved. When units are rejected, they will not receive any payment, or maybe charging them for the variable costs as well if it is sensible. So whenever we want to make payment to employees based on output, we usually have a rate per unit produced, per unit sold, whatever the output of the employee is. These rates could be flat rate or differential rates. Flat is one rate for whatever units you produce. So same rate per unit. For example, you tell your employee you will give them $2 per unit for as many units as they can produce. If they produce 10 units, they will receive $20. If they produce 20 units, they will receive $40, and so on. Differential rate is when there is increment in this rate. So the idea is, if you are putting pressure on your employee, you should compensate them for that pressure by paying them not just the regular amount, but something extra. So in differential rates, we initially give our employee lower rate per unit, but as they increase output, we want to increase that rate, because there is this burden. We will study this in time-based. There is something called overtime premium. So when an employee produces extra units, it could be like they're doing overtime, and they need to be paid not just the regular rate, but a little bit higher. So flat rate, one rate for all units, per unit is the same, and differential rate is different unit rate at different levels. Remember, we studied a variable cost. There was linear variable cost. This flat rate is that linear variable cost because per unit is the same, and differential rate is the non-linear or curvilinear variable cost because per unit changes. So let's directly jump to a question. Now this is the flat rate is not very complicated one, it is very straightforward, so I will not do any question about it. So I will only look at a question on differential rate. If you know differential rate, obviously you know flat rate as well. So what did the employee earn for their day's work? An employee is paid for on piecework basis. The basis of piecework scheme is as follows. 1 to 100 units is 20 per unit, which means is from 1 to 100 units per unit he is receiving 20 cents per unit, and then from 100 to 200 there is 30 cents, from 201 to 299 there is 40 cents, with only the additional units qualifying for higher rates. So there isn't any other rate, so it means after 201 every other unit qualifies for 40 cents. So as the units are increasing, the rate is increasing as well. Rejected units do not qualify for payment. Remember I said when we give payment to the employees based on output, what happens usually is they don't focus on quality, so we want to kind of punish them by not paying for lower quality. We should decide on the level of standard that needs to be achieved in advance. During a particular day, the employee did produce 10 units, of which 17 were rejected. Okay, if 17 were rejected and he produced 210, that means we have 193 good units. They're units in good quality, so he will only be paid for this 193. So when we look at the chart, from 1 to 100 units, the rate is 20 cents, and there are 100 units here, so the total of that will become 20. And then from 101 to 200 range, the rate is 30 cents, and because the total units are 193, 100 and 93 will become 193, so we only have 93 units here, so 27.9 for that. So when we add it together, we have 47.9 total payment received by the employee. So let's make a little bit changes to this question. What if employee produces 450 units? What if he produces 250 units? What if he produces 50 units? What would be the payment? But let's say there is a minimum guaranteed wage. In an organization where employees work based on output, the payment is based on output, the danger is that sometimes maybe they earn nothing. The reason is maybe there is shortages of material, so they're not able to produce, which means they earn nothing, or maybe there's no demand, their employee is not able to sell, so it means he earns nothing. So we want to give them a guarantee. Like in this case, $50. What this $50 means is that if the employee earns less than $50, we will give them 50. If employee earns more than 50, we will give as much more as possible. Now, minimum guarantee doesn't mean that we will give 50 plus whatever he earns. So minimum guarantee is kind of as a security that the employee earns at least something. So looking at these three scenarios, if employee earns 450, then from 1 to 100, this is number one, from 1 to 100 range, where the rate is 20 cents, we have 100 units. So that will be 20. From 101 to 200 units, where the rate is 30 cents, the units are 100 here as well. And then we don't have any other range, so we have from 201 and above, where the rate is 40 cents, and we have about remaining 250 units here. So that would be 100. So when we combine all of them together, we have 150 total payment that we will make to the employee. Because it is more than 50, we will give them 150. Let's look at the other scenario where employee produces 250 units. When employee produces 250 units, remember, you can just copy. The first two ranges will be the same. Only the third one is where we have 50 units. So we have 20. So total becomes 70. If you look at your electricity bill, if you have differential rates, when you compare the bills of previous few months, you will notice that the calculation that is done for the first few units is always the same. And then the third scenario, we have from 1 to 100 units range, where the rate is 20 cents. We have 50 units, and we don't have anything else. That means that the payment employee earns is 10. But because there is minimum guarantee, employee receives 50. So minimum guarantee is kind of a security that employee will earn at least something. So this is it about time-based, output-based or piecework. There's nothing else to explain here. Let's go to time-based or time work. When usually work is not defined, you want to give payment to your employee based on time. Or maybe even if it is not even if it is defined, you don't want your employee to produce lower quality products. You want to give them payment based on time. You could in fact use both of them if you want. You could have benefits of both of these systems. But time-based system doesn't have anything to do with output. Employee receives payment by spending time within the organization. So in time-based, there will be the standard time an employee works. Usually it is expressed in weeks. So we have basic or standard time. This is the normal time an employee spends in an organization. Example, 35 hours per week or 40 hours per week, whatever it is. You might not realize that many organizations use this because you usually go 5 days a week, and if you work 8 hours every day, that becomes 40 hours per week. So even if it is not expressed in hours, it is actually based on time. So your payment could either be based on time or it could be based on output. So for standard time, we have a standard rate. Let's say $5 per hour. So if you work normally 35 hours per week, and then you have 5 per hour, and you work 4 days, if you work full month, you will have $700 payment. And then we have actual time. Actual time is the actual time an employee spends in an organization. And it could be less or more. But in your example, it is usually going to be more to give you that idea of overtime. So let's say an employee spends 40 hours, that is his actual time. Now, because employee has spent more hours, that is overtime. Over means extra, so overtime is time work more than the standard hours. In our example here, 40 minus 35 is 5 hours overtime. Now, obviously, this $5 should be paid. But in developed countries, $5 is not just paid $5 or less than $5. In underdeveloped countries, usually less than the normal rate is paid, because they say, okay, you're working extra, so we will pay little for that extra. But in developed countries, when an employee works extra hours, there should be payment made for that extra hours, and usually that payment is more than the normal rate. In our example here, let's say $7. So we have overtime rate, a special rate. And then we have overtime premium, which is the difference between the standard rate and overtime rate. And our example here, $7 minus $5, $2 is the overtime premium. Next, we have idle time. Idle time is when employee is doing nothing, no work is being done. There could be many reasons, and usually you have to pay your employee if the employee is doing nothing, if his payment is based on time. So idle time could be for many reasons: no demand, no availability of materials, machine not working, no electricity, whatever the reason is. Next, we have shift premium. There aren't any questions about shift premiums, but you need to understand what it is. Shift premiums is when somebody is working at unusual hours. For example, late night. If somebody is working during the day, he receives $5 per hour. Then someone who is working at night should receive higher than that to compensate for the fact that it is very difficult to work at night. Maybe for some it is easier, but naturally it is difficult to work at night. So let's say the shift rate is 8, and then the standard rate is $5. You would have a shift premium of $3. Okay, we have a question here. It actually asks something else, but for now we don't know those. We haven't studied some of those points, so I'll only focus on what is the payment of the employee. I will come back to this question again when we have studied everything in this chapter. I will answer it again, but for now we will only focus on what we know. Employee is a carpenter, normally works 36 hours per week. The standard rate of pay is 3.6 per hour. A premium of 50% of the basic hourly rate is paid for all overtime work. During the last week of October, employee A worked for 42 hours. So after this, skip this question. So I only read up to this. So the requirement of the question is actually different, something else. But I've changed it because we haven't studied those points. So for now, just let's focus on what is the total payment. So employee works 42 hours. There are two ways of calculating this. You could take 42 hours, multiply by the standard rate, which is 3.60, and then for that overtime, which is 42 minus 36, 6 hours. For that 6 hours, there is a premium, 50% of the basic rate. What it means is, for that 6 hours extra work, we are giving 50% extra. Remember, I already included it here with the normal rate, and I've added that premium with it. So total becomes 162. This is one way of doing it, like I've shown it in the graph here. Or another way to do is to treat the basic payment, 36 multiplied by 3.60 separately, and the overtime 6 hours at 3.60 multiplied by 150%, because 100% is the basic rate. You have to pay that as well, and you have to pay 50% extra. And when you add it together, it gives exact same thing. Okay, so this is the second type of payment. Third is bonus. Bonus is when it is a kind of incentive. There are other incentives as well, but they are not usually, they don't usually have calculation. involved. But one of the way payment is made as an incentive is bonus. Incentive means something that motivates employees. So bonus is when you give extra payment to your employee based on better performance. Better performance can be anything. It can be maybe they have achieved a target, or maybe they have reduced the cost, whatever it is. But in F2, it is only going to be based on time saved. And bonus is given to employees that work on time. But remember, practically bonus can be given for anything. So in F2 level, the idea is that those employees that work on time, on output basis, if they achieve higher output, they receive higher salary anyway. So if employee is working based on time and he works better, we need to compensate for that better performance by giving them bonus. So in time-based system, we are kind of adding incentive. And bonus is going to be based on time saved. If something is normally done in 10 hours, an employee do it in 8 hours, we want to give them extra payment for that time saved, the 2 hours. If we don't give extra payment to the employees when they work better, then they will not do better again. So we need to compensate them. Bonuses can be given individually, means to a single person, or they could be given to a whole team. Both of them have advantages and disadvantages. You can use both of them at a time. You could have a group bonus as well. You could have a personal, single, or individual bonus as well. The benefit of group bonus, or the advantage of group bonus, is disadvantage of personal bonus. The disadvantage of group bonus is advantage of personal bonus. So the advantage of group bonus is that it creates cooperation, team working, because when a whole team achieves performance, they will receive bonus. So either all of them receive or none of them receive. But the disadvantage is those employees that are not working, they're lazy, they will also be paid. Advantage of single bonus is lazy will not be paid. Disadvantage is that it discourages cooperation because everybody is thinking about his own performance. So the advantages and disadvantages of each of them are like inverse of each other. Okay, out of the cost that we studied, remember the requirement of this question was actually what is direct cost and indirect cost. So what is direct cost in these costs that we studied so far? Piecework is direct because it is based on output, so it is directly related to output. Basic rate is also direct. The normal time that an employee works in an organization is also direct. And the overtime premium on request of customer is also direct. Whenever customer comes with something that they want to be produced and you tell them you don't have enough time, you are working at full capacity, then the customer requests that do overtime but do this job, I will pay higher. Then in that case, overtime premium would be direct because you would usually be able to charge that on customer. But if it is overtime because of your mismanagement, not being able to manage work properly, then that overtime will not be direct. Direct costs are usually charged on customer. Indirect costs are not usually charged on customer. Remember, I'm using the word usually. Indirect costs usually go to the overheads and then they are absorbed into the units. You will study in absorption costing. Indirect cost, overtime premium, the extra, the idle time or bonus. Remember, the unusual costs are usually indirect costs. The usual costs are usually direct costs. Now let's focus on bonus question. What is the bonus element of Jane's pay for that particular day? Jane works as a member of 3% team in the assembly department of factory. The team is rewarded by a group bonus scheme whereby the team leader receives 40% of any bonus earned by team and remaining bonuses shared evenly between Jane and other team member. Details of output for one day are given below. With hours worked by team production achieved, standard time allowed to produce 1 unit. Standard time allowed to produce 1 unit simply means the time that a unit normally takes. Group bonus payable at $6 per hour at 70% of the time saved. So 70% of the time saved is given to the employee. Only 30% of the benefit of the time saved is taken by the organization. Okay, so team produced 80 units, which normally takes 9 minutes. If we divide that into hours, it becomes 12 hours. This is the standard time. And employees have worked 8 hours because this is the normal time. They didn't say anything about them working overtime. So 8 hours worked, that means there is 4 hours time saved. Now this 4 hours saved is going to be given as a bonus, but 70% of this at the rate of $6 is total bonus. Now leader receives 40% and Jane, another team member, receives 30%. So if we want to directly calculate the Jane's part, it would be multiplying by 30%, which is 5.04. If we want to calculate the total payment of the Jane, it will be the 8 hours, the normal payment that she will receive, plus the bonus, which means 53.04. Okay. Okay, moving on. Now this is the same question as we previously did, but this time we will answer it according to the requirement of the question. Requirement is how much of employee A's earning for last week of October would have been treated as direct. So we only need to calculate the direct cost. Employee A is a carpenter and normally works 36 hours per week. The standard rate of pay is $3.60 per hour. A premium of 50% of the basic hourly rate is paid for all overtime worked. During the last week of October, employee A worked for 42 hours. The overtime worked were for the following reasons. Machine breakdown to complete special job at request of the customer. Okay, now the overtime is 6 hours. We don't have any problem with the basic pay, which is 36 at $3.60. This would be direct. Remember, basic is always direct unless it is idle time. Now, if we look at the others, we have 4 hours machine breakdown. It means this is idle time. And then this other one, 2 hours on special request of the customer. So this becomes direct. The basic also becomes direct. Premium also becomes direct because it is on request. This is idle time. The basic also becomes indirect and the premium also becomes direct. So with this direct here, we have that 2 hours at 3.60 because it is overtime at 150%. Adding both of them together, we have about 140.40, which is C here. So the indirect is the 4 hours at the rate of 3.60 multiplied by 150%. Now, when we add this together, 21.60 and 140.60, it becomes 162, which we previously calculated. Now, let's change this question a bit. And let's assume that the 4 hours work is not idle time. It is not a machine breakdown. I'm talking about these 4 hours. And not on request of customer either. It is not only this 2 hours is on request, but this 4 hours is just a normal overtime that we have taken. In that case, the direct basic payment becomes the same. The overtime on request also becomes okay, but the 4 hours, only the standard part becomes direct. The premium part doesn't become direct. The premium part, which is 4 hours at 3.60 multiplied by 50%, 7.20 would be indirect, and the remaining would be direct. Let's change it a little bit more. Assume the whole overtime was on request and there was no idle time. Then this 36 also becomes direct, 2 also becomes direct, the 4 hours also become direct, so the whole thing becomes direct. So these could be little twists in questions. Okay, moving forward. Okay, next thing is labor turnover. We have already covered labor costs. Labor turnover is a ratio that finds the rate at which employee leave organization. Organization needs to reduce this because there are costs associated with labor. Some are financial, some are non-financial. So one of the main non-financial thing with labor turnover, higher labor turnover, is goodwill, reputation of the company affected. But there are other costs as well other than the reputation. One thing is training. If employee leave organization, you have to hire a new one, you have to give them training, and training costs money. Another thing is efficiency. Employees that work with organization usually know how the things work, and normally when you work on something, your efficiency increases day by day. Like something you study, learning curve in F5, the idea that with time and work and practice, employee learn. You have to advertise for the new job in newspaper, maybe in websites. Hiring cost, the time wasted by the senior staff of taking interviews and stuff. And as I explained, goodwill affected. Now, if you want to keep these costs lower, there are other costs as well. If you want to control the labor turnover costs, you also incur costs, which is you have to incur the cost of welfare of the service, welfare service of the employee. You have to give them a lot of benefits and stuff, medical services, you have to give them car, for example. So all of these benefits that you are providing would be the major cost of preventing. So you have to take a balance. You shouldn't be too focused on keeping the labor turnover costs lower, that you incur a lot of costs on it. But how to calculate labor turnover? Is replacement divided by average employees multiplied by 100. Replacements are those employees that are replaced. What it means is if somebody goes, somebody leaves the organization, you find another person to replace his position. If somebody leaves and you don't find another person to fill his position, it means maybe that person, that employee, was not needed in the organization. So we're not just looking at the employee leaving, we're looking at those employee leaving that we needed. So that's why replacement. And then divide by average employees, which is employees at the start of the year, plus employees at the end of the year, divided by 2. So basically we are finding how much percent of the employees are replaced. So that percentage we want to know comparing to our employees. So should we take employees at the start? Should we take employees at the end? So a good thing usually is to take an average. So we have a question here. What is the labor turnover rate per year? Remember, the lower this percentage is, the better it is. A company has 4,000 staff at the start of 2016, and at the end this had reduced to 3,800 due to redundancies being made. Remember, redundancy means when staff level is decreased, maybe because the capacity of the organization has reduced. 210 staff took voluntary redundancy, which was 10 more than the company had anticipated, and these 10 employees were replaced. What is the labor turnover rate? So what we need is replacement, which they specifically told us, which is 10, and we need to find average employees, which is employees at the start, 4,000 plus employees at the end, 3,800 divided by 2. So 10 divided by 3,900 multiplied by 100 becomes about 0.25%. It is not even 1%. So it is very low. But remember, ratios, the thing about ratios is most ratios, the relative ratios, they don't give meaning by self. They need to be compared with another organization, or they have to be compared with our past years. So the example of this question is, the answer of this question is A. Next, what is the labor turnover rate for last year? A company had 30 direct production employees at the beginning of last year and 20 direct production employees at the end of the year. During the year, a total of 15 direct production employees had left the company to work for a local competitor. What is the labor turnover rate? Okay, the first thing is to find replacements. Sometimes it's given, sometimes you have to find it, but we can find replacements. If we had 30 employees at the start and 15 left, that means we should have 15 at the end. But we don't have 15 at the end, we have 20 at the end, which means that 5 were replaced. So out of the 15 employees that left, we only needed 5. And then average employees is employees at the start plus employees at the end, divided by 2. So 5 divided by 25, multiplied by 100, 20%. So if we compare these two examples, for example, if they were two separate companies, then the performance of this company is very poor because its ratio is very high. The answer here is B. Next, we have labor performance ratios or labor activity ratios. We could look at the performance of employees in many ways, but these are the three common things we look at. When you go further and go to P5 level, a little bit in F5 as well, you understand that these ratios are not always important, or they mostly don't give correct information, or sometimes if an employee is performing better in these ratios, in actuality he could be not performing as well as we would think. So for now, F2 level, these are the ratios which shows performance of the employee. We have three ratios: production volume, capacity, or capacity and then efficiency and productivity. Production volume is the result of capacity and efficiency. Production volume is the overall volume that an employee has achieved. If we talk about production, for example, it is the overall production that has been achieved. And remember, ratios are compared to a standard. We need to have a standard performance, and we have to see whether employees has worked better or worse than that standard. Let's say the budget was that the employee needed to produce 100,000 units in a year. He produced 120,000 units, then it means he performed good. If he produced 90,000 units, it means he performed bad. Now there is another thing, that whether that units can be sold or not, but if we are talking about production specifically, more units is good. Now employee produces more or less units because of two main reasons. One is capacity and another is efficiency. Capacity is consistency, how long an employee works. And next is efficiency, which is speed. To make it a little bit clear, let's say you needed to run 25 miles. That was your target. But you actually run 30 miles. So it means you run longer distance. You normally, the time that was given to you was, let's say, 2 hours. That was how long you had to run. But you actually ran for 1.5 hours. So you ran for lower time. So your capacity was not good. But you actually ran faster. That's why you were able to achieve more than even the budget. So both is important. Consistency is also important. Capacity is also important. Like in marathon, you don't only need to run faster, you need to be able to run for a longer time as well. So if you only work faster for a small time, your output will not be as great. So maybe you work faster as well, maybe you work for a long time as well, but usually, practically, when your capacity is worse, your efficiency is usually going to be good. If your efficiency is bad, usually your capacity is going to be better. So capacity is the time an employee works, and efficiency is the speed at which an employee works, and which gives us overall production volume. So the faster an employee works and the longer employee works, the more will be the production. Okay, so here in capacity, we want to look at whether the employee work more or less hours than the budget. If you work more hours, then it is good. In capacity, more hours is good. In capacity, we are looking at time worked. In efficiency, did employee take more hours than the budget or not? More hours is better. Here we are using the word take. If employee takes less time, it is good. If employee works more time, it is good. So in capacity, more hours is good. In efficiency, less hours is good. Capacity is time taken, time worked. Efficiency is time taken. So the more hours you work, capacity, the less hours we take, which is efficiency, the more will be the production. And opposite is the same. The less hours we work, the more hours we take, the less will be the production. Now there are formulas as well in the book, which many students memorize, but I believe that if you can understand a formula conceptually, there is no need to memorize it. Like for production, and these ratios are usually calculated as 100%. 100% means according to the budget. More than 100% means more than budget. Less than 100% means less than budget. Like in production, if you produce 100,000, I gave example, budget is 100, you produce 100,000, your answer would be more than 100%. If you produce 90,000, then your answer would be less than 90,000. So you will see with this question, I don't tell you to memorize formula, I just ask you to understand it conceptually. Okay, so calculate efficiency, capacity, and production volume ratios. Russia and Flusterco budgets to make 25,000 standard hours of output in 4 hours each during a budget period of 100,000 hours. Actual output during the period was 27,000 units, which took 120,000 hours to make. Let's focus on first thing first, which is production. If you look at the budgeted production, it was 25,000. Our actual production is 27,000. So 27,000 is more than 25,000. So that means my answer should be more than 100%. If I take 27,000 divided by 25,000, it would give me more than 100. If I take 25,000 divided by 27, remember it will give me less than 100. So that way I remember how to calculate it. So I have 108%, which simply means 8% more. Remember, you don't have to calculate this part. You just calculate this, and it's. So I want to explain this, the meaning of this formula. So 108% means our production is 8% more than the budget, which is 2,000 more. So overall output is good. Capacity, the hour that we worked, the standard hours were 4 each, which is total 100, but we actually worked 120. So more hours is good. So if I take 120,000 divided by 100,000, it will give me more than 100 because I work more hours. Answer should be more than 100%. So it gives me 120%, which simply means 20,000 more. Now if I take 20,000 divided by 100,000, it gives me 20% more. So in capacity, more is good. That is another thing, that whether we actually work in that hours or not, that is something else. But usually if an employee works for more hours, that usually means more output. For example, if you study for more hours, it means more study. There is a separate thing, that whether when you are actually studying, you are studying faster or you're just wasting time, that is something else. Next is efficiency. Efficiency is the speed at which we are working. In our example, the units that we produced, 27,000, should have taken 4 hours each, which means 108,000 hours. But remember, it took more than that. It took 120,000, so it means our efficiency is not good. So I have to take 180,000 divided by 120, so it gives me less than 100, which is 90%, or 120,000 minus 108,000. 12,000 divided by 120,000. That is 10% slower. Our overall production is more not because we work faster, it is because we work for longer period. And when you take the capacity ratio, like in this example, and you multiply with efficiency ratio, it gives you production volume ratio, which was 108%. If you take 108% divided by 120, which is production volume divided by capacity, it gives you efficiency, which means if two ratios are given, you can find the third one. See, if I take these ratios, this is efficiency, and then capacity, if I multiply them with each other, because this is a numerator and this is a denominator, they cancel each other. What you are left with is 108,000 divided by 100,000. Multiply by 100 gives you that same 108%. So this is it for topics. Next, let's look at kit questions. Okay, let's look at kit questions. So the first question is, what was the capacity ratio in the year as a percentage to one decimal place? What was the efficiency ratio in the year as to one decimal place? The following question relates to 61 and 61.2. Budgeted and actual production data for the year just ended are as follows. We have product X, budgeted production units and time, total units and total time per unit is not given, and then we have actual production. And then total machine hours worked in the period amount to 29,000 hours. So let's focus on capacity. Remember, capacity looks at the total time worked, which in this case is 29,000, but the budgeted time is 3,000 hours, 8,000 hours, 7,000 hours, and 9,000 hours. 27,000. So we worked 29,000 hours, budget was 27,000 hours. In terms of capacity, that is good. It means answer should be more than 100%. And they asked to calculate to one decimal place, which would mean 107.4%. Efficiency, the speed at which we have worked, the units that we produce, how much time they should have taken. So first I have to find the units per hour or hour per unit. Whichever way you calculate it, both ways your answer would be correct. But I will show you both ways. So I'm taking units divided by hours. So what it does is it gives me units per hour. Or I could do like this. Take 3,000 divided by 15,000, 8,000 divided by 20,000, 7,000 divided by 14,000, 9,000 divided by 6,000. So now if I take 12,000, multiply by, divide by 5, it will give me the time that it should have taken. 25,000 divided by 0.5, 16,000 divided by 2, and 5,000 divided by 0.6667. If we round it off, it will become 7,500. So if you do it like this, or if you take 12,000, multiply by 0.20%, 25,000 multiplied by 0.40%, 16,000 multiplied by 0.50%, and 5,000 multiplied by 1.50. So it gives me exact same thing, whichever way you do it. Now when I add all time, which is 2,400 plus 10,000 plus 8,000 plus 7,500, the time we should have taken is 27,900, but we took 29,000 hours, which means we worked slower, so our answer should be less than 100. So it is 96.2% if we calculate up to one decimal place. Okay, moving forward, what does the labor costs below depict? So we have a variable cost with minimum limit. It is not semi-variable cost. If it were semi-variable cost, this line would start here. So a piece rate scheme with a minimum guarantee. Remember when I explained this graph, I gave the example of minimum guarantee. On a particular day, one employee produces 180 units. What is his gross pay for that day? Okay. The following data relate to work in the finishing department of certain factory. Normal working day, which means normal time, basic rate of pay, standard time allowed to produce 1 unit, which means the normal time a unit takes. Premium bonus payable at the basic rate is 60% of the time take. They didn't say what is the bonus, they say what is the gross pay. So if 180 units are produced, it should take 4 minutes. 720 divided by 4 divided by 60 gives 12 hours. 12 hours should have been taken, but he only took 7 hours. It means 5 hours saved. So there will be a bonus of $5 at 60% of the time saved. And because he has worked for 7 hours, he will receive $5 for that as well. Adding that together, we have 35 plus 15. This is the basic pay. And then gross pay, which simply means total, is 50. Okay, moving forward. We already worked on this one. We work on this one as well. Which two of the following statements about group bonus are true? Group bonus schemes are appropriate when increased output depends on number of people working extra efforts. Yes, group bonus is usually better in a situation when you want employees to be cooperative, and usually the output depends on them working with each other. With group bonus scheme, it is easier to avoid each individual performance. No, non-productive employees can be rewarded as part of group incentive scheme. Yes. Compared with individual scheme, group bonus schemes are difficult to administer. So only 1 in 3 is correct. Next, what are the accounting entries for these wages cost? EXCO has recorded the following wages cost for direct production worker for November. We have basic pay, which is direct, overtime premium, indirect, holiday pay, indirect, it is like idle time, and then gross wage. Remember, there isn't anything difficult about it. Whenever cost is spent on employee cost is spent, we put it in an account, usually called wages control account, and then we divide it into other parts. So we are simply shifting the cost from that department, and we are dividing it to these other costs. So initial entry would be debit expense or labor costs and credit cash if we make payment, for example. And then we take that cost from that control account. Remember, you should already know control account. We are taking it from that control account and we are putting it in these separate accounts. So that control account will be credited and these other accounts will be debited. So we will credit the control account, which is the total account. And they said here the overtime was not for work, which means it is overheads. So the answer here would be the specific accounts will be debited. Debit work in progress account, debit overheads control account because they are indirect costs, overheads, and then credit wages account. So credit wages and debit overheads and debit overheads and debit work in progress. Remember, the idea is we are taking the cost from this account and we are debiting into these specific accounts. Okay, we already did this question as well. This one as well I explained. In a typical cost ledger, what is the double entry for indirect cost incurred? Remember the overheads we just saw. Debit overheads, credit wages account. Debit overheads, credit wages control, which is C here. And then this one we did as well in staff turnover. So this completes accounting for labor chapter. I will not be able to upload videos as frequently, but I will try to upload at one video every week. So this is it.